Welcome to the channel. This is Reliable Rudy. In this video, we're going to do another charting update on recent tickers I've done analysis on, and I'm going to share my thoughts on what's transpired over the last month and what I think is going to transpire going forward. I did see we had a nice little boost in subscribers over the last month. I think that's a positive, saying I haven't been posting videos. So maybe you guys are liking the content that I'm posting. I'm not sure, but hopefully we get some more feedback. I do have a couple video requests I need to make videos on. I've been kind of slacking on that, but I am going to get around to them. But nonetheless, before we get into this video, I'm not a licensed financial advisor. Everything in this video contains only my opinion and is for entertainment purposes only. I do have a couple new holdings and tickers we're talking about, and some of them are related to index funds as well. So keep that in mind, but I'm going to try and be as unbiased as possible. Okay, going into the video, we're going to start with the IXIC. Now, I do not have my chart set up exactly how I left off from the last video. But nonetheless, let's talk about a couple of things. Long story short, double top comes in lower high at the all-time high price. This is a 702 retracement. 702 retracements are deadly, and what's transpired from there is a 1, 2, 3, 4 fourth wave, pretty much back testing the bottom of wave 1. If you consider this the wave 1 right here, it actually meets it on the money. But if you call this the full completion of the wave 1 down here, okay, it gets a little bit overextended, but nonetheless, I'm looking for a 1, 2, 3, 4, 5 wave structure, sort of meeting in down to the long-term trend line. Now, would you consider this downtrend broken? I do not know. I think next week is a very big week in terms of short-term volatility for the market. But we're going to go over a couple things. Now, where did we leave off from the last video? I believe it was September 16th. I did rewatch it, so I was a little bit refreshed with what I was talking about. But I state that on this Friday, the 16th of September, that this is kind of a bullish close, and I'm looking for some sort of ABC structure that could transpire over the course of a day. It could transpire over the course of a week. And I'm pretty sure I stated somewhere in the lines of that. And why do I say I was looking for an ABC? Is because from the top of my wave 4, we have a 1, 2, 3, 4 on the fourth wave back testing the bottom of wave 1, and we have this crack of this lower support, but we set this nice looking candle. So could you say that this is the end of wave 5? It's tough to say that, but this candle does meet in at a gap fill. I'll mark that for you guys real quick so you guys can see what I'm talking about. Not that one, it was this one right there on the money. And we do get a little bit of a gap down, but shaved bottom, a little bit bullish, and we do get a sort of an ABC meeting in with the downtrend. I stated directly, that's what I'm looking for, and after that I'm looking for some sort of 5-wave structure that comes down to this gap fill. And if we don't get good volume off the 200 weekly, which it was rolling in right around here as well, and this gap fill, then this support is not going to hold, and we're going to get a wave 5. Now, this wave 5 might not be over, depending on how people have their long-term trend line set, which could be in various, it could be so many different ways. A lot of people, I would not be surprised if they had it set through all of this, where last week we actually did put candle bodies into. But I'm going to stay true with how I had my my trend line set. I believe it was somewhere like that, and I might even move it up just a tad bit, just like there. But last week was a very important day. So after this support had cracked this low right here, the next thing I had on my chart was this gap up. On this day, Wednesday, July 1st of 2020, we gap up, and we fail to fill this gap. It attempts to twice, and we wick to it twice. Now, where do we gap down to on this massive red gap down to start the market? We gap down, that gap's filled, and good volume actually comes into the market. This is a better looking candle than what we've seen at these other gaps. Nonetheless, we got decent candles that come at these gap fills, but this was true good volume that came into the market. Now, it tries to take out that candle on the next day, but ultimately we closed this week above where I had my downtrend set. But that does not mean that this is over. The open price for next week, I think, is very crucial. And to keep it simple, I want to see who has more control of the market right now. The bulls or the bears, and you have this gap down right here, and you have this gap up right here. Whoever can fill their gap first has more control, in my opinion. I do not know how much truth goes to that, but if they can fill this gap, and let's say it gets some sell off this gap, and it trades back down here, and depending on how people have this downtrend set, if it trades back down here, fills this gap meeting in at the top of this downtrend, that could be potentially a higher low starting to form at the tail end of the long-term 1, 2, 3, 4, 5 wave structure. You're looking for some sort of higher low to come in, and I want to see it, bull case scenario off of that, I want to see it test this downtrend. Now if it can test this downtrend, even if it gets rejected, that would not mean that it's bearish because you have new support that you're building in. If you can set some sort of higher low and then push this downtrend, that will be shorter term the bull case scenario for the market. Now if it ends up getting rejected by this downtrend, you have to remember that it has a high, a lower high, another lower high, another lower high, and if we get rejected again, another lower high. That is not a winning formula. It's not a winning equation for the market, in my opinion, because all it would take is for this support to give up, but lo and behold, we have the previous high and the long-term trend line. But after that, trend line, I will say, trend lines are meant to be broken. This is not the holy grail. This is not the end-all be-all of opportunity to buy in. What am I recommending you guys to send it on this freaking trend line? Please, Lord, no. But it is going to be an opportunity that I'm going to look for to dip into the market. Now, if you're able to get a crack of that trend line, your next gap is down here, down around 9,000 flat. And I think that's justified the dip into the market. And you also have your other previous high coming after that, meeting in right around the gap fill as well. So I'm going to stay true to the chart that I have set up. And that is my update on the Nasdaq. Now moving along, we're going to go talk about Apple. Now Apple I have not started a new position in, but nonetheless we're going to talk about what has transpired with Apple. So I believe it's this day, yep, Friday 16th September 2022. This is where I made the video and posted it on my last video, and I state that if the Nasdaq has some sort of ABC, I'm going to look for Apple to trade up with it. I believe I state something exactly like that, and here is me saying I'm looking for some sort of ABC and then another 5-wave structure coming down to this gap fill. I had it marked out. You can go look at the last video, exactly like this, I'm pretty sure. Nonetheless, after this day, we do get this little short-term pop, a little ABC, but what transpires from there is a 1, 2, 3, 4, 5 wave structure, meeting right down pretty decent support. It just so happens to be my neckline. We've talked about this multiple times in my video, is that we've had a left leg, a neckline's built, a right bottom, an extended right leg. One day you're going to backtest the neckline. You almost get there, you get this full extension, but then we actually get down to the neckline and we get a nice extension. Now where does this extension meet? It meets at my 3-to-1 risk reward for my backtest of the neckline and extends directly to the gap fill that we've called out many times. And since then, it has just been hammered. 1, 2, 3, 4, 5 wave structure. You get the ABC pop, and then you get another 1, 2, 3, 4, 5 wave structure meeting in. Now, Apple has an interesting look, and that is that this green day in the market last week actually came in for a little bit of a higher low. Now, whether Apple is able to extend from here, regardless, I don't really like the valuation of Apple right here, and I'm not interested in it. I'm interested in it from 90 to 120, and in particular the $96 gap down here. I truly believe that this gap will get filled one day. Now, if I'm wrong in that, there's 20 plus thousand stocks out there, probably even more, like 30,000. I don't even know the exact number. But nonetheless, if you're wrong about one and you miss out on one, it's not really a big deal. There's so much opportunity out there, guys. But nonetheless, I would say Apple's pretty related to the markets. If the market's bullish, Apple's going to find a way to be bullish with it more than likely. But if Apple's bearish, the market's probably going to be bearish with Apple. They kind of correlate with each other, saying that Apple is in the three major indexes, as in the Nasdaq, the S&P, and the Dow Jones. But what do I know? I only have 53 subscribers, right? But nonetheless, Apple does have earnings coming up. I'm not touching anything to do with the earnings coming up in the next week. So I'll leave it at that. I'm not going to touch base with that too much more, but I do think that, bare minimum, I think that this 131 gap is going to get filled at some point in time. So if that's the case, then the market is probably going to have tough days ahead of it at some point. So yeah, that's my update with that. Moving right along, we're going to go to Google. Now, we did start a position in Google. Yes, we did start a position in Google, so my chart's empty. I was probably doing some other charting stuff at the time. But nonetheless, Google had a 1-2 double top coming in at the 786. Maybe it's the 702. Let me just check real quick. Nope, right at the 702 on the money. 702, 144. Nonetheless, 1, 2, 3, 4. Now this was the long wave 3. Now this wave 4 truly backtests the bottom of wave 1, and I'm pretty sure I made my original video of Google somewhere around here saying, hey, guys, you might want to watch out a little bit on Google. It's got some decent support, had a decent uptrend. That didn't matter at all. This goes on a 1, 2, 3, 4, 5. We don't even really get a true ABC in there because we crack support. You see how it has this nice support built up right here, and also the nice support built up at 100 flat roughly. Now this goes right through that. But where do we go? I state clearly in the video that, hey, this is probably some sort of 5-wave structure right here, and Google's valuation, fundamentally sound company, is not going anywhere anytime soon, and it's pretty fairly priced to an extent, in my opinion. Now, I could be wrong, I do not know, but everything that I done, all the analysis I did in Google, I liked everything that I seen, and from a charting perspective, I really liked this 90 something dollar gap. Yeah, let's take this out and just at least mark these gaps out a little bit. To me, this was a clear buying window, and had it kept dropping, I probably would have kept buying more and more. But I was very intrigued on what was going on in the market for these couple days in particular, because I was buying Google and it was a new position. I was very excited. But what's transpired from there, I'm not interested in selling. I'm holding those shares for a long time. Now, that does not mean that you have to do that. That does not mean that you have to buy this company. Like I said, and as of right now, it's a very small position. Not even a 0.5%, if I remember correctly. But nonetheless, we did get the position started. Now, if it does come down into these ranges down here, we're going to start filling that position out accordingly. This next window, call this a window, or whatever you want to call it. Maybe even back in this range again, I might think about dipping into a little bit. But you got to remember that these gaps, I would consider those filled, even though it doesn't fill this. You could say that you could see good volume come in off 95 flat, but if this gives out, this is the window we're coming for. And I will dip into more Google if that is the case. But nonetheless, Google is cracked down through the downtrend. This to me looks like a push of the downtrend, but all in all, I would say that it probably has another downtrend somewhere like that. Let's see it go extend up to this downtrend, and then I'll think more highly about buying these ranges again. But yeah, that's the case scenario. If we extend and get some true hard rejection, it's how is it going to act down here at these lows again? That is what I'm going to be focused on. But I think for Google to be bullish short term, I think the market also has to be a little bit bullish short term. But I could be wrong. This setup is it has been trading a little bit different compared to the market, but that is my update on Google. BTI. Now BTI, I have fairly kept the same, and we actually did start our position in BTI as well. Now BTI is interesting because the videos on BTI that I've made have actually gotten now the total amount of views isn't there, but the consistency of views is there. So I do gotta say that I was very interested in BTI, and the first diagram says it the best. Is that you have this double top right here that comes in at a little bit over the 702, but nonetheless I look at it as a 1, 2, 3, 4, 5. Now this support that is held up decent. Headset went out. The support that's held up decent right here, and it's stated many times, is that how is it going to act down here at these gaps? We got good action off the first one. We got some actually decent action off the second one. This is a decent look, putting multiple wicks into this, and this low. How is it going to act? Well, when it finally gives out, here's what it does. Boom, you get that nice exhaustive wave 3. This to me, I look at it as a wave 3 if we're looking at the first diagram. Now I say it only goes down to here. It's tough to tell exactly how it's going to go. But nonetheless, what I'm looking for in BTI is for it to backtest the bottom of wave 1. Now my wave 1 is right here. So this is my window. If I want to sell it, that is my window. Now from these gaps down here, which if you bought close to these gaps and off this gap, you actually were able to sneak in on that dividend, which is what I attempted to do. I believe it was somewhere in one of these 2 days. Now normally I wouldn't buy right away off of a big gap down when support cracks, but I believe it was one of these 2 days right here where I actually bought some of my initial position because I was really trying to get in for that dividend. But on the dividend day, we did actually fill some true gaps right here, and I was able to dip into it a little bit more. We actually have a decent trend line as well that's kind of meeting in with this. It's not set accurate, but it was the third point of contact that you could say already had 3 points of contact, 1, 2, 3. Yeah, I just kind of like and I initially had said that I really like 35 flat, that mid 30s. And this was justified enough for me to start the position. Now, am I a genius for starting the position? No, I don't think that I'm a genius for starting that position because I'm already telling myself right here that I am expecting the price to get down to the low 30s. Now, if it doesn't get down there, it's not the end of the world. I will take the small amount of shares that I got, and I'm probably going to be holding them for the long term. I said that this is a selling window. It is a selling window, but I'm not going to be interested in selling off of it, even though I'm expecting this. But when we do get this, you best believe I'm going to stay true to my position, and I'm going to continue upping this position. Now, if this wave 5 comes in, if we actually get a true rejection off the bottom of wave 1 and this wave 5 comes in, I look at it, not only is it the long-term trend line. I should clear my drawings out a little bit. Nonetheless, there is a longer term trend line that's kind of meeting in with this. Let's just go draw that in real quick. Let's go draw this longer term trend line in. And I would say that's kind of meeting sort of like this, in a way, give or take. But this is where the 5-wave structure is going to end. Now, whether that trend line is higher or lower, I like the valuation of it in the low 30s, and we do have some nice gaps that need to be filled still. I'm going to mark these out real quick. Oh man, I'm falling apart here mid-video. I'm going to mark that one as 2 of them, but then we have one more right there. I'm going to stay true to this, and if it is to fall below this, I'm going to look at this as a long-term trend line, and I'm going to probably add into the position off of this line as well. Yeah, short term, I would say probably a little bit bullish. It's going to go try to fill this gap. It could get rejected off of the start of it, which that is the start of the gap. As you can see, we're getting closer, and it is getting selling pressure. Open price is going to be big. You can see if we can open up at all higher, I would say it's going to try to attempt to reach this gap. If it's able to reach that gap, to fill the gap, that is the back test of the bottom of wave 1. I'm going to turn pretty bearish on it, and I'm probably just not even going to pull my BTI chart up at all during that, when that transpires. Now, if it's able to push through that, great. But nonetheless, from a charting perspective, I would say it's probably going to get hard rejected off of this gap, and we're going to come down and maybe fill this original gap right here. So we have this gap up from this day. I want to see this price try the hold, but if it fills this gap, more than likely it's coming down to these gaps as well. So keep that in mind with BTI. We're going to move along. Disney, I did start a small position in Disney as well. Now let's go back to where Disney was sitting at on September 16th, which would have been this day right here. So September 16th, you have that wick bottom. Now, I'd stated in my original video, which was made up here shortly after the earnings, that this gap's getting filled. And on this day, September 16th, I state I do not like Disney at all right here, because nonetheless, I don't think it can get bullish until it gets down to this 100 flat. But also, you have if it's coming down to 100 flat, it's probably coming down to this area as well. Now, I did dip into some Disney. I believe it wasn't the first. I didn't like the full red engulfing candle, but I believe it was somewhere in this day. Oh, no. It was this day. This was the day we got into a little bit of Disney. I know because I marked it with this line, and I knew I wanted to talk about it. But that was also right off of the gap fill as well. So it wasn't at the bottom of this candle. It was actually towards the top of this candle when we had gapped down, and I thought that this was starting to try to hold, if I remember correctly. And I was looking for it to turn up like this. And ultimately, we had another trading day, and I did dip into a little bit on this day, and we did get some right off the gap fill on this day, and a nice little pop. But ultimately, I'm expecting it to probably get rejected off that and retest this gap fill. Here's your gap. You gap up. Let's just clear the chart now that we have some of that information out. We gap up. I'm expecting this gap to eventually get filled. I want to see good volume come in. We have earnings coming up, and I want to see a confirmed higher low come in at this nice support right here. But let's backtrack to how I had the chart set up. We do have another gnarly gap that needs to get filled, and I will be a buyer down here at 85. If Disney gets down to 85, I like the valuation of it, and it's still going to be a very small position, because after that we have the long-term uptrend that's going to be meeting in probably, if we're from current price, in those 60s to 70s. I like the valuation of it there, and I think that's a good time to dip into more of the position. But nonetheless, I want to see it break this downtrend. It's got a clear downtrend right here. This could say is starting to be the beginning of that third point of contact. You have the 1, 2, 3. A little bit of a bearish look, I would say, because that's going to try and drive it down and crack this support. The bears are trying to get it to break this support and come down to this gap at 85 bucks. But if it is able to push that downtrend in some way, shape, or form, looking for it to backtest the top of that downtrend, and then let's go up and try and fill some of these gaps, these green lines up here, and we do have another downtrend that is going to need to get broken. So that is my update on Disney. We did start a little bit of a position on it, but nothing crazy. By all means, it was just I just like the moat that Disney has. I like the space that they're in, and I think that the chart represented a buying opportunity, so I went after it. Netflix. Now, I actually continue to get backlash on Netflix. It's crazy. But when I had rewatched the video, it clearly states that I believe that this is some sort of retrace phase. From the top of this gap down, you can see we're getting almost direct correlation. We trade in the middle of this. We gap up over top of that. We're seeing direct correlation with my half. The more that I had this in, the more I was like, oh my gosh, this is just a 1. It's going to retrace. It's going to set some sort of double top up here into this 702, maybe even the 786 or 7 or the 618. You know, if it's lucky, it actually goes up to the 786 and fills this gap down. I doubt that this gap ends up getting filled. I'd be surprised, but I'm actually a little bit baffled because when I rewatched that video, I hit Netflix on the nail. I get it. It couldn't have been said any better, in my opinion. But I clearly state that I'm looking for this to retrace, and it's going to attempt to push up to these 300s again. I think I say that on the money. If you're a shorter term trader and you're looking for that, you could have took advantage of this. I could have took advantage of it. But ultimately, the long story for Netflix is that I don't think this is a bottom. I really don't think that this is a bottom. And this is going to come down here, and one day I would say it's coming down, and it's probably going to crack 100 eventually, and it's going to try to fill this gap. That is what I think, and the reason why is because on this day here you have your high for Netflix. It sets a lower high after a gap down, or a huge gap up from earnings. I'm telling you, this gap right here, I would be surprised if this gap does not get filled in the history and going into the future for Netflix. I think that that is where Netflix is going. I could be wrong. You know, this could just stay on an uptrend and never reach these prices again, but I'd be baffled if it didn't at least come down to these lows again. That's my update on Netflix. Bull case scenario, you know, it's going to keep running like this and try to fill this gap. And bull case scenario is that it actually comes down to these levels again, sets some sort of higher low, you can put a trend line through it, and we turn up and truly fill this gap. And if this gap gets filled on the first push, you know, it might try and retrace all the ways up to this range. If I pull this retracement to the top, this 702 meets up with a gap fill as well. This could be a 1, 2, 3, 4. This could play out over the course of the next couple of years. So it's going to be interesting to keep looking back on Netflix. Bear case scenario is that, you know, it might not even get through this gap fill. It might not even get close to this gap fill. Netflix might come down, fill this gap, get a short pop, set a double top, come down to these levels, try the hold, eventually crack, back test it again, and have a final leg down. That is what I see with Netflix, and I wouldn't touch it, especially after the recent price increase. And I actually didn't even look through the earnings report, but I bet you they're not that special. It's my opinion, could be wrong. HPK, and then we're going to wrap this video up. Nothing's changed with HPK. Long story short, you guys know the deal. You had double bottom, we get a full extension on this. You know, I probably wouldn't have it through that whole wick, but I'd have it something like this. You have a double bottom, extended right leg. One day it's going to backtest the neckline. What do we do after the full extension? Backtest the neckline on the money where we set this. Another double bottom, another extended right leg, and now I'm looking for this to turn to some sort of 5-wave structure. If this is my wave 1, here's my retrace. That's at the double top at the 618. I state here is Friday the 16th right here. I state this double top is bearish all day. This isn't even going to attempt to fill the 702 from here. And what do we get? We trade down to the lows of wave 1. We extend up and we set another lower high. Boom, boom, boom. 3 points of contact. That 4th point of contact, those wicks don't even meet the downtrend. What's going to happen again? It could set a higher high right here, but this downtrend is going to hard reject. It's not even going to reach it. I doubt it reaches this downtrend, and what's going to happen is going to crack this support. It's going to probably trade down even lower than this at some way, shape, or form. It's going to get a pop that backtests the bottom of this, and it's going to trade down to the neckline. Would you rather buy it up here, buy it down here? Nothing's changed with HPK. That's the update. And that is going to complete the video. I hope you guys enjoy the content. I know it's a longer video, 30-minute video, but a lot of good information in there. And if you haven't seen my last video, I recommend you go do that because there is some really good information. You can learn quite a bit from it. That's going to do it for this video. See you guys on the next one.